Yes, I think global growth has been resilient. And there are two key factors which have supported this resilience, or maybe three. The first one is that the United States economy has been stronger than anybody anticipated, given the significant tightening of interest rates that the Fed did. So inflation came up, inflation fell down, sort of the Christmas tree effect. Interest rates have been coming down, and the unemployment rate has remained very close to the structural unemployment rate or full unemployment, and the economy has been growing very reasonably, close to 3%. So I think that this has been positive. Second, emerging markets have been very resilient. We haven't had casualties in big emerging markets. We have had some developing economies, low-income countries, which have been in trouble, some debt restructuring processes going on, particularly in Africa, sub-Saharan Africa, but the main emerging markets have held very well. And the European Union has avoided falling into a protracted recession. So I think that this has supported the global economy.
What are the chances that inflation starts to swap away from this Christmas tree effect, Christmas tree shape, to more of a ski slope where inflation keeps falling and actually becomes unanchored to the downside from here?
Well, there is always that possibility, but I think it's less likely than the opposite. I think that if anything, I think that now the last mile of inflation is always a bit more complicated because you have services inflation which tend to be a little bit more resilient, downward resilient. So I think that inflation will continue to move gradually towards target unless we have some major policy shock or anything which brings price pressures up again. And I'm thinking of something like Middle Eastern conflict escalating and therefore oil prices going through the roof, or the United States elections leading to an outcome where there would be widespread tariffs, and this is something that could push up prices. So I see scenarios where price pressures may be upwards rather than downwards. Having said that, if no big shock happens in the European Union, and particularly in the euro area, I think that it's more likely that inflation will undershoot the target rather than the opposite.
In terms of the geopolitical risks, it is a huge theme here at the IMF, the World Bank annual meetings. How does this compare to history in terms of the risks we've dealt with, and at what point does it start to undermine investment decisions because the market and investors are so uncertain about the geopolitics they don't want to commit?
Well, I think we have had in the past animal spirits being inhibited because of other factors rather than geopolitical factors. In specific countries, you have had political factors inhibiting investment, but at the global level, that is not so common. And even now, I think that if you think of what is the additional impact that geopolitical uncertainties are having on suppressing investment, I don't think we have seen that impact yet. And you can see that by the disconnect between geopolitical risks on the one hand and the behavior of financial markets on the other. Insofar as stock markets are a good proxy for how people are investing their money in variable income, then you can see that disconnect over there. So I don't think that geopolitical uncertainties have become a big inhibitor of investment. I think there are other factors which may be holding down investment relative to what would be, I think, appropriate. But geopolitics, I don't think that is the main factor yet.
Indeed, the stock market remarkably resilient, even heading into a US election with the outcome uncertain. Are you concerned about more volatility ahead? Because we've already had it in a number of months. August, a big sell-off. September was a fairly strong volatility market event too. What lies ahead? Do you think there could be more volatility? Well,
I think there could be volatility, and there could be some market correction at some point if somehow these geopolitical risks are materialized in a way that hits markets, because there is this disconnect between market valuations and the geopolitical risks. But that's something that would be a market correction, and that could have implications.
Short term, we are setting up for the outcome of a US election. Some voters already casting votes. What do you make of the potential of another Trump presidency? Because it was a very noisy old environment last time around that business had to duck and weave around.
Well, I think that the business sector is holding the breath regarding what the outcome of the elections would be. I think that a Trump presidency, the conventional wisdom is it would be more pro-business, but there would be also more tariffs. There would be some stoppage to the illegal immigration, and that is going to put upward pressures on prices, and therefore it may sort of delay the reduction of interest rates, which is something which may not be welcomed by business insofar as keep the cost of financing slightly higher than what expected. So I think it's a mixed bag.